Hello and welcome back to Altcoin Buzz. It's Jimbo back for another market update. In today's video, we've got a little over 24 hours left of the weekly candle, and we're going to dive in and see where we want to see Bitcoin close up by the end of tomorrow. We will have a look at the Dow Jones in preparation for what could be another red week ahead. We're going to dive into the charts and see if we can identify where we might find some protection for the Dow Jones. And finally, there's a really interesting comparison to be made on the Google Trends chart, and I think you should stick around to check that out for sure. If you would like a chance to win the CryptoTag Zoo Starter Kit, make sure to be subscribed to Altcoin Buzz if you're not already, and leave a comment down below. Here's the Bitcoin weekly chart, and there's a few things that I think that we need to pay attention to specifically today, and I'm going to show you what they are. First of all, we are clearly still above that 200 weekly moving average, this red line here at 5,500. We'll go down into the little time frames, the lower time frames in a moment, and see what conditions need to play out to make sure that we close above it, but it is nice to see that we are still above it at the moment. You can clearly see that we had a rejection from this pump this week at the resistance point highlighted earlier. It's always easier to take a look at why we have these resistances in place on the higher time frames, because they're just clearer. It's a lot less noise, and you can see we've got this trend line here, this purple trend line. We've got our white support and resistance lines drawn in, and we also have our longer term trend lines here, this resistance red line and this support line here that we have managed to respect so far. Even though we've dropped below it, we haven't seen a close below it, and so far so good in terms of that. I've added this box in here, this grey box with the red outline, and the reason is I think this is a significant area, and I wouldn't be entirely surprised if we see price action back in here once more before we break up. So I've just put that box in place for now, and we will come back to revisit this box and see if price also comes back and revisits it in the coming weeks before halving. So I think it's always useful to dive into the 4 hour before we close off today's Bitcoin analysis, because there's something here that I'm seeing that I really think you need to pay attention to on the 4 hour. And part of it is this MACD red marker that we've seen form here. We've actually already had the cross to the downside on the MACD with that red marker showing. Only 1 hour into this candle, so that could be rejected just yet if we see a nice reversal in this candle when we break to the upside. I'm not seeing much strength of that happening just yet, to be honest with you. However, we could be seeing this potentially forming a ascending triangle pattern now that we found sort of a bit of resistance here. Be interesting to see if we go and test up against the 6,700 level again. Personally, I think it's more likely that we break to the downside, but being above the 50 exponential moving average and respecting that is a sign that things are looking a little bit better. So initially my thoughts are keep an eye on this 50 exponential moving average and this MACD cross, and let's see where it goes. And the reason that I'm saying that is I want to bring your attention to a recent event here that aligned all these technical indicators were virtually exactly the same, and something played out. So let's take a look, right? So right now we've got the cross on the MACD, right? The initial cross on the MACD, and we've got that condition happening here at 4 o'clock on the 7th of March, morning of the 7th of March, 12 o'clock noon UK time is when the cross occurred. At that time, we were above the 50 exponential moving average. That cross coincided with a break of the 50 exponential moving average, and our stochastic RSI was almost at the exact same level here, around the 25 to 20 level, that we are currently in the trading zone of right now as of 5 o'clock UK time Sunday. The reason that I'm highlighting this is you can see how significant the break of this 50 exponential moving average was, and the previous time it broke, once we closed below it, we obviously had our huge 56% move down, but this was the leading indicator that that was going to happen. And once again, we find ourselves precariously positioned just above the 50 exponential moving average with our MACD cross and our stochastics in a very similar position. if you want me to give you a potential leading indicator which would suggest whether or not we close above or below that weekly 200 moving average, this is what I'm paying attention to personally. Let's see if this 50 exponential on the 4-hour holds, or if we break down and see some sort of another breakdown. I'm sure if we do see a breakdown, let's hope it's not the 50% again. However, if we were to see a 50% breakdown, that would put us, let me show you here on the weekly, just because this is the easiest place to show it. If we did get that 50% breakdown again, I'm not saying it's that likely, but we find ourselves at maybe just below, we're looking at, again, around the 3,000 mark. I gotta say, I think that it's likely that even if we are to break that 50 exponential moving average on the 4-hour, I don't think we see another big 50% sell-off, but I do think we could see over the course of a few days a sell-off that takes us low enough to be in this 3,000 box, as I highlighted in the weekly. But let's see, right? The first indicator of that is going to be if this exponential moving average breaks. As of yet, it hasn't. And whilst it hasn't, I'm actually relatively bullish. But if it does, and it coincides with this cross and this hitting the bottom here on the stochastics, then I'm going to hunker down for a little while because I think we will see a sell-off. So onto a slightly different chart right now, and we take ourselves over to the Google Trends Compare page. And what you can see is I've got overlaid here buy Bitcoin, sell Bitcoin, and Bankrun. And I want to show you how these are playing out. You can obviously see that buy Bitcoin has been average the highest out of all of these, and that actually we're currently coming back down a little bit from where we were at the peak of 8th of March to the 14th of March, where we were seeing the really bad things happening in the stock markets, the beginning of this collapse, and people were really panicking. That obviously spiked the interest in buying Bitcoin at the time. I wanted to show you that we are seeing Bankrun as a topic beginning to trend upwards. If you guys know what that means, then you're willing to pay attention to that, and maybe that might cause you to take some precautionary measures. Because if you know, a bank run is where people will try and go to their cash points to take their cash out. So I think it's really interesting to see that we're seeing this spike, but it doesn't always, just because it's spiking on Google Trends doesn't mean that it's always going to happen. You can see there was a spike back here in July 2019 of bank run as well. So it's not an immediate leading indicator that we're about to see a bank run, but I just wanted to give you guys that awareness that that is increasing the search terms. Interestingly, sell Bitcoin doesn't seem to be moving pretty much ever much at all. Now, I want to overlay one more comparison chart. Now, I think this particular comparison sums up my opinion on a really pertinent topic really well, right? So one of the questions that's been put to crypto Twitter and crypto space in general over the last couple of days is Bitcoin decoupling from the stock market? Now, whilst it's nice to see that Bitcoin's price action has moved a lot quicker than the recovery in any of the stock markets, I also want to add to you that that doesn't take much more than common sense to work out that that's going to happen. It takes significantly more liquidity to move the stock market's a bounce of 80%, which is what we saw from bottom to top in the last price move for Bitcoin, than it does for the stock markets do. The liquidity difference is absolutely massive. And I just want to put that into perspective for something here with you here, right? Here's our charts for Bitcoin, sell Bitcoin, Bankrun, all things that are pertinent right now. Let's add in one more word which applies to all of the economies, and let's see the difference. And that word is recession, okay? That's the word I want to add onto this chart, is recession. And I want to show you, I think this gives you an idea of just how big a difference there are between global economies and Bitcoin and cryptocurrency at the moment, right? There's recession. The chart is so much bigger for a term like recession that you almost smooth out Bitcoin, the Bitcoin searches, the Bankrun searches. These things are absolutely insignificant against recession, and the point is it's because these global markets, global indices, the Dow Jones, the stock markets, they are so much bigger than cryptocurrency. So whilst I said it's nice to see Bitcoin price action moving against the stock markets, which are currently moving down, I don't personally believe in this decoupling rhetoric that's being pumped around at the moment. I don't think there's enough liquidity in cryptocurrency for it even to be close to be considered to be correlated. Yes, we did see some correlated price action over a course of a week or two, and that was because of investor fear rather than correlated assets. People were losing money in all markets, and that was reflected in all markets. Of course, the cryptocurrency market is one that's going to bounce the quickest and the hardest because it's the one with the least liquidity, which means that it takes a lot less to pump the price than the other markets. I thought this was really interesting, and I really wanted to bring it to your attention because, this really puts into perspective the crypto world, which is, new, and although we're 11 years in, don't get me wrong, that's still a great period of time, but this is a new, immature market in comparison to the stock markets, and I think that this comparison of recession, bank run, sell Bitcoin and buy Bitcoin just really sums it up. We're talking about, they're not even on the same stratosphere to compare, right? What I will say is I do think we will see Bitcoin start to prove itself against something in the market, but not so much the stock markets. For me, it's going to prove itself against inflation. And that could be a knock-on effect of this coronavirus situation. We're seeing the US government and other governments around the world continuously printing more money right now, inflating their currencies, and who knows, maybe around the corner's hyperinflation. I'm not saying that with any degree of certainty, but we just don't know. But that is what Bitcoin will prove itself against. That is what Bitcoin was designed for, to hedge against hyperinflation, to be a truly scarce digital asset. Not to replace the stock market, certainly not yet. Maybe once the market's much more mature and we've seen altcoins and regulated exchanges which could even begin to handle what the stock markets handle. But we're not there yet. We have to put this into perspective and try and avoid all the uncertainty. It's kind of like fake news, right? Finally, to clear up the video and conclude for the day, we will cover Dow Jones. I know did say I was going to do it in the other order, but it doesn't matter. Let's quickly cover it. Still above our support box that I highlighted earlier in the week, getting dangerously close. Weekly closes at 19,174, and our top end support of this box is at 18,700. Monday morning is going to be very interesting. If we start to see early signals in the markets that this is breaking down further, well, who knows how big the red wick will be on Monday morning. It does look like it may have actually found a support, but again, like I said, it's very difficult to tell. We've seen this these two candle wicks not yet breach the support area, which is good to see. But we know we've got this heavy resistance at 21,000 and the heavy support at 18,700. So let's take these 2 points as our markers for Monday and see where it goes. Let's hope that we stay above and out of this support box, because as I said in the previous video, I think that if we're to break into this range, even if we don't break through the bottom end of it, which would be horrific to see, it's going to need to take still a huge amount of downwards price action for us to break that line. That's significant, almost 20% away. And I remember a time where 20% in the stock market seemed like it would take weeks or months to move, and yet we know what's been happening over the last couple of weeks, so who knows. But even if we don't break the bottom end of this, I would suspect that we would trade within this range for a long time. We were previously in there for over 800 days, so any break into here probably would end up with us staying in there for a long time as well, but it just strengthens the support area as well. Okay, so if you guys want to take a chance at winning that CryptoTag Zeus starter kit, make sure to leave a comment down below. Please slap a like on the video, helps us get the content to more interesting viewers. Subscribe to Altcoin Buzz if you haven't already, and you can always go ahead and check out altcoinbuzz.io, the website. That's a fantastic place to get your news roundups on the daily. And other than that, I'll be back on Monday for an update. We will find out on Monday how did the stock markets do. We will take a look at Bitcoin and see if we got that weekly close above the 5,500 zone, or if we found a candle dip into our support box. Until then, bye guys.